How to invest in gold. Since its discovery in prehistoric times, gold has been valuable as a store of wealth that is always in demand. It had been popular as a way of diversifying risk and weathering storms of inflation, which it still is. Up until 1971, all the world's currencies were pegged to the value of gold, and the United States' decision to peg currencies to its own US dollar instead has been an extremely controversial decision ever since. With the recent inroads made into reducing the dominance of the US dollar in global trade, gold has come to the forefront once more as a viable option. Here's all you need to know about investing in gold. The fears of a massive global recession have been present for a year, and surely enough, inflation and the price of natural resources have been persistently high. Political analysts are being rather gloomy about predictions for future events, a reality set off by Russia's invasion of Ukraine. Due to that war, global wheat prices have witnessed a record 60% increase. And when the prices of basic foodstuffs are up and continuing to remain up, it's never a good sign at all. Frank Trotter, president at Battle Bank, a digital banking startup, has said, as inflation continues to run high, this might be an excellent time to increase allocations to gold. Over time, analysis have shown that gold has been a good hedge against inflation. Now, one of the most obvious ways to invest in gold is to purchase gold bullion. Bullion is the term for gold purified enough to be accepted as a form of investment by jurisdictions around the world, amounting to a purity of about 99.5%. Gold bullion is typically available in either coins, ingots, or bars, with gold bars being arguably the most popular choice, and is the first thing people think of when they consider buying gold. Most of those people will eventually be looking to licensed retailers first and foremost. You have the opportunity to explore various gold bar options on well-established retail websites like the American Precious Metals Exchange, APMEX, JM Bullion, and Wholesale Coins Direct. These platforms allow users to buy gold bars or ingots based on factors such as weight, quantity, and price. It's also possible to buy from local dealers in your country, although information on them may be hard to find depending on where you live. Other than getting a decent storage plan for your gold bullion, you should also properly vet sellers you're buying from. Since gold bullions are a valuable investment opportunity, the opportunities for scamming and fakes are endless. Very recently, an 87-year-old woman in the United Kingdom was scammed out of her life savings in a gold bullion scam which involved a physical seller. It pays dividends to be vigilant, pun absolutely intended. Another popular option for those that prefer to own physical pieces of gold is buying gold jewelry, with India itself accounting for 11% of the world's total household gold ownership in the form of jewelry. Again, quality is key here. Gold purity is calculated based on the carat scale, with 24 carats being 100% gold. You have the option of melting jewelry down into coins or bars, depending on your preferences. Just make sure you've got investment grade gold. Next up is the option to invest in gold mining companies or gold mines. This is just like when you would buy stocks or directly invest in any other companies, except you'd now be doing so in order to hedge your cash in a constant flow of gold coming into the market from mines around the world. While gold mining companies are generally seen as a safe bet owing to continued profitability, no market is ever without competition. Investing in individual gold companies carries similar risks as investing in any other kind of stock, given their nature as stocks. Without a solid diversified investment plan, you may find yourself with single stocks that don't really provide you with any sort of security if their profits are shaken up. According to Forbes, some of the premier gold stocks include those of Torex Gold Resources Incorporated, Anglo Gold Ashanti Limited, and Franco-Nevada Corporation, among a whole host of others. Do your research, guys. Lastly, gold mutual funds and exchange-traded funds are becoming a popular option as well. Both of these options are increasingly being seen as a good choice due to the fact that they are offering more liquidity than physical gold and more diversification than individual gold stocks, all the while providing you with the vaunted investment investment stability of gold. Gold ETFs are investment funds that trade on stock exchanges, representing ownership of specific storages of gold bullions. These funds aim to track the price of gold and provide investors with a convenient way to invest in gold without the need for physical storage, which is expensive and can be risky on its own. When you invest in a gold ETF, you essentially own a share of the fund, and your investment is stored in that share. On the other hand, gold mutual funds are investment funds managed by professional fund managers who pool money from multiple investors to invest in a diversified portfolio of gold-related securities. These securities may include shares of gold mining companies or gold futures contracts. The fund's performance is tied to the performance of the gold-related securities it holds. With professional fund managers handling the whole thing, it is a relatively safe and risk-averse method of investing in gold. The main drawback with both of these is that the value of gold mutual funds and ETFs may not entirely match up with the market price of gold, and these investments may not perform the same as physical gold. According to Investopedia, some notable gold ETFs include Invesco DB Precious Metals Fund and SPDR Gold Trust, while on the other hand, notable gold mutual funds include Fidelity Select Gold Portfolio Fund. Whichever you choose, investing in gold is a significant financial decision, even if it's a relatively safe option. In the most extreme of circumstances, gold investments can be as volatile or unsafe as any other stock that's trading fiscally volatile goods. Ultimately, it all boils down to what you're looking to achieve with gold investments, your aversion to risk, and how much money you're willing to put into it. These will determine whether you want physical gold, shares, or stocks in a gold mining or trading company. Subscribe and stay tuned for more insight on crypto and finance. Thanks for watching.